Paul, there's a lot of clickbaity type thumbnails out there that the same people who hype up every other stock and say how wonderful they are, they will then splice in a stock market crash to get clicks. And you're hesitant to do this. I mean, we try to reduce the amount of clickbaiting. When we buy something, we're very adamant about it. But the idea of a stock market correction or crash is on everyone's mind. And it has taken me so long to start falling in love with the idea. Isn't that weird? To fall in love with the idea of what we're going to be buying when everything falls. I had visions of this show. When you say in past episodes, like what, it's like at the moment we're buying not very little. I mean, it's almost every video is a no, but I can't wait to the day where my portfolio crashes, the stock market corrects, and then you and I say all this, Paul, because when the market is red, Mo, our channel blows up. I mean,
why is that?
Why you tell me why? Well, people flock to your morning show
because when it's fun to buy hype and do whatever other idiot out there is doing, but when it hits the fan, people want to be told it's okay from the people that actually have a process in place that know that it's going to be okay.
And who also said this was going to happen. And by the way, we haven't touched the surface. And people are scared about a 1% drop. I mean, grow up, guys.
I love when people say, everything's red, the market's pulling back. I go and look at the market, and the S&P is down 0.7%.
So we've been high flying for years now, and in any sense of the market being down, people are freaking out. Paul, how can you guide our new investors, our subscribers, our patrons, that growing list of amazing patrons? Help us, fondle me.
Well, at first, I'd like to guide you to Instagram.
You keep doing it. This is
where you can follow Mo and I on Instagram because we're trying to get our blue check marks. So investing is all about emotion. That's really what people think it's all about these numbers. Guys, anybody can understand the numbers. We can learn the numbers. I can teach you the numbers tomorrow. I can't teach you the emotional side of it. And what's the emotional side of it? The emotional side is when things are falling, are you going to be okay with that? You look at your house. People don't like seeing their house lose value, but they don't have a big sign on their house every single day that says, your house is now going down in value. Your house is going down in value. With the stock market, there's 80,000 websites and the news. They even put the ticker at the bottom of all these websites. I mean, it's hard to avoid that.
Yeah.
So when you see it go down 1, 2, 3, 4, whatever percentage it is going to be, you just see your net worth going lower and lower and lower and lower. If you own a business, do you know what your business is worth on a day-to-day basis?
No clue.
And that's what we're trying to teach. You need to look at stocks the same way. You're buying a future stream of cash flow, right? And if you overpay for that future stream of cash flow, your returns will be less. Think about it this way, guys. If this was your future stream of cash flow forever, if I were to give you 1, 2, 3, 4, 5, etc., till the end of time, what would you pay me for that stream of cash flow? Depends on several factors. What are interest rates today? What return is adequate for you? Where are you in your life? All these factors matter. But if I said to you, for the next 50 years, it's going to go up to $1 a year, and you got to pay me $10,000 for this. Your immediate reaction should be, that's insane.
Yeah, too much.
Insane. Okay. If I told you pay me $10 for this.
Oh, I like that, yeah.
You'd say, that's a no-brainer. I'm going to get my money back in the first 4 years, right? Okay, that's the idea of investing. The idea of investing is the company's going to do what it's going to do, and you're going to make a guess because we don't know the future on what the company's going to do. And your job is to find the companies and the stock market level where the future prospects are better than the price you're paying for them today. That's it. Mm-hmm. The present value of all the future cash flows based on a return of 10% a year, which is what the market does. Can I pay less than that? Now, is the stock market overpriced right now? Without a doubt, unequivocally, bet the farm. If you don't believe it, you are stupid. The stock market is overpriced. Check, by how much? I believe over double. Yes. Does that sound crazy? It does sound crazy, but let me show you this. Warren Buffett, who everybody thinks is a genius until he starts telling you how to value stocks. Warren Buffett has this thing called the Buffett indicator. It's stock market to GDP ratio. It takes the full market cap of the stock market and divides it by the GDP of the U.S. economy. Because essentially, there should be some, as the U.S. economy grows, companies within the U.S. economy will grow as well, and it should be somewhere related. It is currently at 199%. Spoiler alert, all-time high. Based on this and based on history, this will give a 2.8% return, a negative 2.8% return a year for the next 10 years, and that includes 1.3% in dividends. So it's actually minus 4.1% a year for the next 10 years. That means 10 years from now, they expect the S&P value to be about half of where it is today. I repeat, based on negative 4% a year, if you have a company that every single year, look at my screen right here. If the S&P is currently at 4,400 and it loses 4% a year, which means it goes to 95.9%. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. I did my math wrong. 10. We're at 2,900 on the S&P. I don't know why I said half. Oh, that's why. Got it. If it was going the other way.
Yep.
So it's saying that 10 years from now, the S&P will be at 2,900. 10 years from now. Does that mean it's actually going to happen? Not necessarily. Of course not. We don't know what's going to happen in the future. But that includes dividends. So including dividends, you're still going to lose money because you're going to lose overall 2.8% a year. Now, how accurate has this thing been over time? Was a guy named John Hussman. I have a bunch of really smart friends who say Hussman's an idiot and he has looked poorly. This market has buried a guy like this guy. He had like 5 billion assets under management. Now he has like 300 million. But he has these models here. And this is based on market cap to GDP projection and excessive. Bottom line is this matches the market cap to GDP. 1928. Look at this. It projected a negative 6% return per year. They actually had a subsequent negative 7.5% return. The blue line is what's projected. The red line is what actually happened. Oh, wow. Does this look like it actually falls in line over the last 70, 80, 90 years?
Wow, look at that.
Yes. And look, we're now disconnected over here. This is where, look at 2000. 2000 said we were going to have negative 7.5%. We ended up having negative 4%. Look at where we are today. It's saying, according to this model, for the next 12 years, this is next 12 years, negative 6% a year, including dividends. Now, does this mean he's going to be right? No, guys. But it took a massive, massive bull market for it to be driven to this level. And just think about it logically. Are you going to make more on your house if you pay more for it today or less for it today? If you don't understand that paying more for something means you make less return on your money, then you need to go understand the basic of investing. This phone is worth what it's worth, and it'll be worth what it's worth in 10 years. The less you pay for it is the more money you'll make or the less money you'll lose. That's it. Mm-hmm. And the stock market right now has very, very obscene levels where it's selling for 40 times the average of the last 10 years of profit. 40 times. We're looking for companies that sell for 22 times or less over the last 5 years of free cash flow. The market's currently selling for 40 times the last 10 years profit. 40 times the last 10 years profit actually added up. I look at this going like, darn. Is this overpriced? Apps, every metric out there, price to sales, stock market, every reliable metric. Now you'll have people out there saying, well, if you look at price PE ratio, it's not that expensive. Well, yeah, because interest rates are really low and the market's booming. The economy is booming. It just doesn't happen that way.
So Paul, let me stop you. We get this all the time from our patrons on our live streams, on our fireside chats, in Mo's live stream, with such a gloomy future ahead, potentially. Should I wait to invest? How do our new investors, what do they do with their money? Because this is scaring me, Paul, and you need to cuddle me as always.
If you're older and you're close to retirement, you should exercise more caution. You shouldn't have 100% of your money in stocks. It's very obvious. If you're younger, under 40, 50 years of age, and you have 20 or 30 years left to work or more, do not worry. Your job is to dollar cost average and low cost index funds that match the market. You will crush everyone if you just match the market. It is unbelievable to me how many people think that having a financial planner, because they made them 3 or 4 times their money, that is crap returns. Mm-hmm. If you just match the market over long periods of time and you dollar cost average, what is dollar cost averaging? You're going to buy as markets go down and up. Overall, you're going to pay a pretty steady amount of money overall relative to value. That is your job as a young person. Because the most important thing for gaining wealth in a long period of time is starting as soon as possible and getting as much money in the market as possible as time goes on. Don't try to time things. It's been proven time and time again. When humans time things, they get things wrong. Right?
Well, speaking of timing, Paul, Mo, I wanted to bring this up. Is if you're a new investor, if you're new to our page and you've gone on YouTube to find information, YouTube, the algorithm will point you to some of these very popular hype investors telling you to buy, Paul, and they create a fear of missing out. You have to buy Tattooed Chef, Tesla going to the moon, all the Doge, all the coins. You have to buy all these. They create this fear that you are not going to get on these amazing gains where we're teaching sort of a get rich slowly mentality, Paul. But they have now flipped this, Mo, is that they have now said that, Paul, by saying this, is you are creating fear, uncertainty, and doubt. How dare you maybe put a halt on these high-rising, high-flying stocks? You are creating fear.
Great. Go to your doctor and explain to your doctor that you weigh 350 pounds and you're 5'9". You eat McDonald's every single meal.
Which you do almost.
Which I do. And you smoke cigarettes and take heroin.
And you drink.
Is the doctor inciting fear in you by saying you are going to die if you keep doing this? No, I'm still optimistic about the future of the U.S. and the stock market. I'm just telling you at these levels, you can't expect a good return. And guess what? I have proof. 08 and 09, I was buying. In fact, my money guys in Chicago used to love calling me. They literally said, you're the only good phone call we have. I was like, stocks are falling. This is a great time to buy. That's the point. And when stocks fall further and more and they're bad and everybody's screaming for the hills, what will I be saying?
Great.
Guys, it's about the long term. You're buying good companies at good value. Yeah, but Paul, they keep going down. I know.
How do I switch my mindset to be more like you? It's happened for me, Paul. I love the red days. I can't wait. But how do I switch my mindset? It
takes time. Listen to this channel. Join our Discord because there's everybody in there who I love when I see it when people say, Baba's falling. I was buying Baba at 180s. Now it's at 165. People taking the Discord, it's falling. Other people are like, yeah, don't we want that? It's being around, show me your friends, I'll show you your future. If you're around people who talk this way, you will start to think like them, right? And I'm not trying to sit there and say there's fear, uncertainty, and doubt? But there's always uncertainty and doubt. It's the future. We don't know what's going to happen.
Yeah.
The question is, am I fearful for the next 10 years? It depends. If I'm an opportunistic person who wants to buy stocks at lower prices, I'm not fearful. I'm actually very excited. That's why I always tell Mo, my brother, I'm like, God, the next 10 years are going to be great for us. Mm-hmm. I'm just telling you, if you're buying today, expecting the stocks on a permanent plateau level, you're going to have down times. But you still should do it if you're part of a plan for retirement. Buy every single month. As stocks fall and go up, you'll buy every single month, in, month out, and you will do well in the long run as long as you have long periods of time to wait it out. I'm not the guy who's saying, I hate it when people say, oh, the U.S. China's going to take over. No, China's not going to take over. Will China grow faster than the U.S.? 1,000,000%. Will they be the biggest economy in the world? Absolutely. But the U.S. is still going to do great, and we can't beat China. We cannot beat China in their growth. We are too large and too wealthy. That is not fear. That's a fact. The positive is the U.S. isn't going anywhere. Mm-hmm. The positive is we're still going to be a richer country, as far as I know, as far as I think, 10, 20, 30, 40, 50 years from now. Okay, so that's just it. If you call it FUD, call it FUD. But if you go to the doctor and you call him an a-hole because you weigh 1 billion pounds and eat McDonald's and don't take care of yourself because he tells you you're going to die, well, then you're the idiot. I don't know what to tell you. You're a moron.
Also, when it comes to that, we're still buying stocks. We're just not buying garbage companies.
Yeah.
So if you want to say that we're creating fear, uncertainty, and doubt of your crappy company, then yeah, we are, I guess.
I've had friends tell me, oh, I agree with you. There's going to be a stock market crash. Oh, yeah, why is that? I mean, it's just crazy out there. Yeah, but why is it crazy? I mean, stocks just keep going up. Okay, I get that. And I still tell them, like, they don't know what they're talking about.
Yeah.
Like, even people who agree with me, if they don't have the right logic, I'm like, well, you know what you're talking about. You're just saying it because stocks go up a lot? Okay. That doesn't mean that stocks are going to fall. I mean, does it not help? Yeah, it doesn't help, but what makes stocks that I think are going to fall is because of valuations. And they've been proven over time to be very reliable in the long run. The next 10 years are going to be a very tough 10 years. Look at every 10 years in history. Whenever there's a great 10 years, it's followed by a not so great one. But a not so great one's followed by a good one. So,
and for the record, This has been incredible.
This has been the best 10 years of stock market in history.
Yeah.
Maybe not. I haven't looked back, but I can't remember. I mean, the last 10 years have been insane.
I can't think of a time where we go from April of one year to April of the next year over up 100% or something like that.
After the world shut down.
We will be here to fondle your thumbs up when you need help. And we're always here. And Paul, I just can't, I can't wait. It's weird. I'm not dying to see my retirement fund half itself. But boy, I can't wait to what we'll be buying on this show.
But if I said to you, Seth, buy these great companies and you're not allowed to get retirement fund for 10 years.
That's true. Yeah, I mean,
would you feel comfortable buying at low valuations companies that are growing? You'd be like, yeah, I've been, and then 10 years from now, not knowing what happens in between, you probably wake up and go, as long as they hit reasonable metrics, your companies are going to be worth a lot more money.
Yeah, I guess that's it. You know, it's people ask me how difficult the process is of investing, and with my little book stocks, I spend about an hour a year. And to set it and forget it.
But you watch it more than you should.
I like it. And I'm embracing red. That's what I'm employing our viewers to do, is start embracing the red and knowing you'll be better off in the future, especially by watching this channel and buying great companies.
And that's the thing. Watch the channel and understand why you're embracing red. Don't just get excited about embracing red.
Yeah.
Understand why.
Fondle thumbs up. Watch more videos. Join the Patreon. We're giving away another Tesla. That's our show. That's our take. Thanks for watching. See ya.